Your first step to financial control. So, you are thinking about a personal loan. Good for you for taking the time to understand your options. A personal loan is money you borrow from a financial institution, like a bank or a credit union. Unlike a mortgage for a house or a car loan for a vehicle, a personal loan can be used for almost anything. You might use it to consolidate high-interest credit card debt, which can be a very smart move. You could also use it to pay for an unexpected medical bill, a home repair, or even to start a small business. The key is that you are borrowing a specific amount of money and agreeing to pay it back, with interest, over a set period of time. The terms of the loan are very important, so listen closely. When you take out a personal loan, you will have a fixed interest rate. This means your payment will be the same every single month. This is powerful because it gives you predictability. You know exactly how much you owe and when it is due, which makes budgeting so much easier. You will also have a set loan term, which is the length of time you have to pay it back. This could be anywhere from 1 year to 7 years, depending on the lender and the amount you borrow. A longer term means a lower monthly payment, but you will pay more in interest over the life of the loan. Now, there are two main types of personal loans, secured and unsecured. An unsecured loan is the most common. This means you are not putting up any collateral to back the loan. The lender is giving you the money based on your creditworthiness alone, your credit score, and your history of paying bills on time. A secured loan, on the other hand, requires you to offer up an asset as collateral. This could be a savings account, a car, or another valuable item. Because the lender has less risk with a secured loan, you might get a lower interest rate, but you must understand that if you fail to pay, the lender can take your asset. Deciding to take on debt is a serious decision, and it is one you must not take lightly. You have to ask yourself, can I afford to make this payment every single month without fail? Be honest with yourself. Look at your income and your expenses. A personal loan is a tool, and like any tool, it can be used to build something wonderful, or it can cause a lot of damage if used improperly. The goal is to use this tool to improve your financial life, not to dig yourself into a deeper hole. You must be strong, you must be smart, and you must be honest about what you can truly handle. When most people think about getting a loan, they think about the big, well-known banks, and for good reason. These institutions are established, they are everywhere, and they offer a wide range of financial products. Banks like Chase, Bank of America, and Wells Fargo are household names. While they are known for mortgages and credit cards, many also offer personal loans and small business loans. Going to a big bank can feel safe and familiar, especially if you already have a checking or savings account with them. Having an existing relationship can sometimes help your application, though it is never a guarantee of approval. Let's talk about some of the major players. Citibank, for example, offers personal loans with competitive rates, especially for customers with excellent credit. You can often apply online and get a decision relatively quickly. U.S. Bank is another large institution that provides personal loans for a variety of purposes. They are known for their structured loan products that can help you manage your debt effectively. Then you have Wells Fargo, which offers both personal loans and a variety of financing options for small businesses. Each bank has its own specific requirements, interest rates, and loan amounts, so you cannot assume they are all the same. The primary advantage of working with a major bank is the potential for in-person service. If you are someone who feels more comfortable talking to a person face-to-face, walking into a local branch can be very reassuring. You can sit down with a loan officer, ask your questions directly, and get help filling out the paperwork. This human touch can make a big difference in reducing the stress of the application process. For small business loans, these banks often have dedicated business bankers who understand the unique challenges of entrepreneurship and can guide you toward the right products for your company's needs. However, you must be aware of the downsides. The big banks are often stricter with their lending requirements. They tend to favor applicants with very good to excellent credit scores, stable income, and a long credit history. If your credit is less than perfect, or if you are self-employed with a fluctuating income, you may find it more difficult to get approved. Their application process can also be more rigid, and may take longer than some of the newer, online-only lenders. You need to be prepared for a thorough review of your finances, because they are in the business of minimizing their risk. You must not limit your search to just the big banks. There are other fantastic options available, and you would be doing yourself a disservice not to explore them. First up are credit unions. These are not-for-profit financial institutions owned by their members. Think of them like a financial cooperative. Because they are not focused on making profits for shareholders, they can often pass the savings on to you, their members. This can mean lower interest rates on loans, lower fees, and a more personal level of customer service. You are not just a customer at a credit union, you are a member owner. Some of the largest credit unions in the country include Navy Federal Credit Union and PenFed, also known as Pentagon Federal Credit Union. While their name suggests they are only for military members, many have expanded their membership criteria to include a much wider group of people. Alliant Credit Union is another great example. They often offer very competitive rates on personal loans. The main thing you need to know about credit unions is that you must become a member to apply for a loan. Membership is usually based on your employer, where you live, or an organization you belong to. It is almost always worth checking to see if you are eligible to join one. Then we have the world of online lenders. Companies like SoFi, LendingClub, and Prosper have completely changed the lending landscape. These are financial technology or fintech companies that operate almost entirely online. This means they have lower overhead costs than traditional banks with physical branches, and they can often pass those savings on to you in the form of lower rates. Their application processes are typically very fast and streamlined. You can often apply from your computer or phone in minutes and get a decision within a day or two. This speed and convenience is a major draw for many people. Finally, for those of you who are entrepreneurs, do not forget about Small Business Administration loans. The SBA doesn't lend money directly. Instead, it guarantees a portion of the loan that you get from an approved lender, like a bank or credit union. This guarantee reduces the risk for the lender, making them more willing to lend to small businesses that might not qualify for a traditional loan. SBA loans can be used for a wide range of business purposes, from buying inventory to purchasing real estate. The application process can be lengthy and complex, but the favorable terms can make it well worth the effort for a growing business. Choosing a lender is a big decision, and the first most practical step is to find out who even operates in your area. This sounds simple, but it is a crucial step that many people overlook. For the big national banks like Chase or Bank of America, this is easy. They have branches in most major cities and a strong online presence that serves nearly every state. You can simply go to their website and use their branch locator tool. Just type in your zip code and it will show you all the nearby locations. This is especially important if you want that in-person service we talked about earlier. For credit unions, the process is a little different. Their membership is often geographically based or tied to specific employers or communities. The best way to find out if you can join is to visit the websites of credit unions in your state. They will have a page that clearly outlines their membership eligibility requirements. It might say something like, anyone who lives, works, or worships in these specific counties is eligible to join. The National Credit Union Administration also has a credit union locator tool on its website, which can be a great starting point for your research. Do not assume you are not eligible. You might be surprised. When it comes to online lenders, geography can still play a role, but in a different way. While they do not have physical branches, some online lenders are not licensed to operate in every single state. Before you get too far into an application, you must verify that the lender offers loans to residents of your state. This information is almost always found in the fine print at the bottom of their website or in their FAQ section. It would be a waste of your time and energy to fill out an entire application only to find out at the end that they cannot legally lend you money where you live. Ultimately, checking for availability is just the first filter. Once you have a list of lenders that serve your area, you need to compare them on the factors that matter most. Look at their advertised interest rate ranges, the loan amounts they offer, and the repayment terms available. Read customer reviews to get a sense of their customer service. Is their website easy to navigate? Are their terms and fees clearly explained? You are entering into a multi-year financial relationship. You want a partner who is transparent, fair, and easy to work with. Do your homework. All right, it is time to get organized. When you apply for a loan, the lender is trying to answer one main question: if we lend this person money, can and will they pay it back? To answer that, they need to see proof of who you are, how much you earn, and how you have handled debt in the past. Having all your documents ready before you apply will make the process smoother and faster. Think of it as preparing your financial resume. The first thing you will always need is proof of your identity. This is non-negotiable. It means a government-issued photo ID that is not expired, such as a driver's license, a state ID card, or a US passport. Next, you must prove your address. The lender needs to know where you live. A utility bill, like an electric or water bill, a lease agreement, or a bank statement with your name and current address, will usually work. Make sure the document is recent, typically within the last 30 to 60 days. They will also need your social security number. This is critical because it is how they will check your credit history and score with the major credit bureaus, Equifax, Experian, and TransUnion. Your credit report is the story of your financial life, and lenders will read it very carefully. This is why I always say you must know your credit score before you even think about applying for a loan. Then comes proof of income. This is where you show the lender that you have the money coming in to make your monthly payments. If you are an employee who receives a regular paycheck, this is straightforward. You will need your most recent pay stubs, usually from the last month. You will also likely need your W-2 forms from the last 1 or 2 years. Some lenders may also ask for your most recent tax returns. If you are self-employed or have variable income, you will need to provide more documentation, such as your 1099 forms, profit and loss statements for your business, and personal and business tax returns for the past 2 years. Finally, you need to provide information about your existing debts and assets. The lender will want to see your full financial picture. This means you will need to list your other obligations, such as car loans, student loans, mortgage payments, and credit card balances. You can find this information on your most recent statements or by checking your credit report. They may also ask for your bank account information. This serves 2 purposes. They can verify your savings and cash flow, and it is also the account where they will deposit the loan funds if you are approved. Get these documents together, and you will be ready to apply with confidence. If you are a non-US citizen or a new immigrant to this country, I want to speak directly to you. Navigating the US financial system can be confusing, but I want you to know that it is absolutely possible for you to get a personal loan. You just need to be aware of some additional requirements. Lenders are concerned about stability and the legal right to earn income in the US to repay the loan. So, in addition to the standard identification documents, you will need to provide proof of your legal residency status. This is a key piece of the puzzle for the lender. The specific documents you need will depend on your status. If you are a permanent resident, you will need to provide a copy of your green card, which is Form 1551. This proves you have the legal right to live and work in the United States permanently. If you are in the country on a work visa, such as an H-1B or L-1 visa, you will need to provide a copy of your visa along with your employment authorization document. Lenders will look closely at the expiration date on your visa. They need to be sure that your legal status to work will last for the duration of the loan term you are applying for. One of the biggest hurdles for newcomers can be a lack of US credit history. If you have just arrived, you will not have a credit score, which makes it difficult for lenders to assess your risk. This is what is often called having a thin file. Some lenders are starting to recognize this challenge. They may be willing to consider alternative data, such as proof of rent payments or utility payments. Some may even work with international credit reporting agencies to pull your credit history from your home country. It is also very wise to open a US bank account and a secured credit card as soon as you can to start building your credit history here. Do not be discouraged if a big bank turns you down. This is where you must be a financial warrior. Explore credit unions that serve immigrant communities, or look for online lenders that specialize in lending to non-citizens. Some lenders have built their entire business model around serving this population. You may also have more success if you can apply with a co-signer who is a US citizen or a permanent resident with a strong credit history. This person agrees to be responsible for the loan if you are unable to pay, which gives the lender the security they need. Your path may have a few extra steps, but financial empowerment is for everyone. Before you go through the entire process of a full loan application, there is a wonderful tool you must use. It is called pre-qualification. This is a preliminary step offered by many lenders, especially online lenders and some large banks. Think of it as a sneak peek. You provide some basic financial information: your name, your address, your estimated income, and your social security number. And the lender gives you an idea of whether you might be approved, for how much, and at what potential interest rate. This is an incredibly powerful step for you, the borrower. The most important thing to understand about pre-qualification is that it usually results in only a soft credit inquiry. A soft inquiry or soft pull does not affect your credit score. This is the denial-proof way to shop around. You can get pre-qualified with multiple lenders to compare potential offers without any negative impact on your credit. A hard inquiry, which occurs when you formally apply for a loan, can cause your credit score to dip by a few points. You want to save the hard inquiry for when you have chosen the best lender and are ready to move forward with a full application. The pre-qualification process gives you leverage and knowledge. Instead of applying to one bank and hoping for the best, you can see offers from several lenders side by side. Lender A might offer you $10,000 at 12% interest, while Lender B might offer you $12,000 at 11%. This information allows you to make an informed decision, not a desperate one. You can compare not just the interest rates but also the loan terms and any potential origination fees. An origination fee is a charge for processing the loan, and it is deducted from your loan amount, so you must pay close attention to it. However, you must remember that pre-qualification is not a final approval. It is a conditional offer based on the initial information you provided. After you choose an offer and proceed with the full application, the lender will do a deep dive into your finances. They will verify your income with pay stubs and tax returns, confirm your employment, and perform a hard credit check. If they find any discrepancies between what you stated in the pre-qualification and what your documents show, they can change the terms of the offer or even deny your application altogether. So be truthful and accurate from the very first step. I need to be very clear about something. There is a lot of misinformation out there, especially online. I have heard whispers and seen posts about something people are calling the Trump loan program or a special government fund to help people who have lost money in stock trading, cryptocurrency, or other investments. Let me tell you, point blank, this is not real. There is no such government program. It is a rumor, and a dangerous one at that. You must not fall for it. It is a scam, plain and simple. These scams are designed to prey on people who are in a vulnerable financial position. They promise easy money or government grants to cover your investment losses. They might use official-looking language or even mention the name of a public figure like a former president to make their claims seem legitimate. They will ask you to pay an upfront fee to process your application or to release your funds. This is a giant red flag. A legitimate lender will never ever ask you to pay a fee before you have been approved for and have received your loan money. Any fees, like an origination fee, are taken out of the loan proceeds. Please, I am asking you to be smart and to be skeptical. The government does not offer personal loans to bail people out of bad investment decisions. That is not how it works. The SBA provides loan guarantees for businesses, and there are federal student loans for education, but there is no program to reimburse you for trading losses. If you see an ad or get an email or a phone call promising this, you must ignore it, block the number, and delete the message. Do not click on any links, and certainly do not give them any of your personal or financial information. If you have lost money and are struggling financially, a legitimate personal loan from a reputable bank, credit union, or online lender may be a tool to help you get back on your feet, perhaps by consolidating other debts to lower your monthly payments. But that is a real financial transaction with real requirements, like a credit check and income verification. It is not a handout. The path to financial recovery is paved with discipline, honesty, and hard work, not with fantasies of a government bailout that does not exist. Do not let scammers take what little you have left. Be on guard. So, we have walked through the entire process of navigating personal loans. We have talked about what they are, where to find them, and what you need to apply. You now have a checklist for your documents and special advice if you are new to this country. You know how to use pre-qualification to your advantage and how to spot a dangerous scam. The knowledge is now yours, but knowledge is only powerful when you act on it. The decision to take on a loan is one you must make with a clear head and a solid plan. It is a commitment that will affect your finances for years to come. Before you sign on that dotted line, I want you to do one last thing. Take a deep breath and look at the final loan offer. Look at the total amount you will pay back over the life of the loan, including all the interest. Is it worth it? Will this loan move you forward toward your goals, or will it simply chain you to a monthly payment that will cause you stress and anxiety? Only you can answer that question. A loan should be a solution, not another problem. It should be a bridge to a better financial place, not a hole you dig for yourself. remember that you are in control. You have the power to say no. If the terms are not right, if the payment is too high, or if you just have a bad feeling about it, walk away. There will always be other options. You can work on improving your credit score to qualify for a better rate in the future. You can look for ways to increase your income or decrease your expenses to avoid needing a loan altogether. Do not ever let a lender or a situation make you feel desperate. Desperation leads to bad financial decisions. You must always negotiate from a position of strength, and that strength comes from being informed. Taking control of your money is one of the most empowering things you can do in your life. It is the foundation upon which you build your dreams. Whether you get this loan or not, I want you to continue on this journey of financial education. Keep reading, keep learning, and keep asking questions. Build a budget, track your spending, save for emergencies, and invest for your future. A loan can be a helpful step, but it is only one step on a much longer journey. You have what it takes to create a life of security and peace of mind. You just have to believe in yourself and take charge.